That message just opened a leveraged position. No chart, no order ticket, no hesitation, and this one placed itself while I was asleep. TradingView fired the signal. The server checked it was really TradingView, sized it, sent it, and attached the stop and the target before I ever saw a candle. Everything the system does lands on one page: equity, positions, distance to liquidation, funding, and where profitable wallets on-chain sit against unprofitable ones. And every morning at 7, a brief writes itself into my inbox: account state, funding candidates, positioning, and at most 3 setups, each already sized to 1% risk. I want to be clear about what this is before we build it. This is not a money printer. Automation doesn't create an edge. It executes whatever edge you already have, and if that edge is negative, it will lose money more efficiently than you can by hand. What it removes is the expensive part: staring at charts for 6 hours waiting for a setup, sizing up after a loss because you're annoyed, missing the entry you already had rules for because you stepped away. 6 pieces: charting and webhooks, a Telegram bot, a dashboard, a funding scanner, an on-chain whale tracker, and a cloud server that keeps all of it alive. I don't write code. Claude writes it, I check it, and I test everything in dry run first. Every prompt I used is in the companion guide in the Alpha Cartel Discord, link below. Let's build it. Step 1 is the signal layer, and it starts on the chart. I give Claude the pair and the timeframes I care about: weekly, daily, 4-hour, and 1-hour, and ask it to write a Pine script that marks structure automatically, swing highs, swing lows, and the level's price has actually reacted to more than once. That's the first thing that dies here: manually drawing lines. The pivots are calculated from a fixed lookback, not eyeballed, so they're the same levels every session. Consistency is the point. A level you draw slightly differently every morning isn't a rule, it's a mood. The second layer is Confluence. The strategy pulls trend direction from 3 higher timeframes and counts votes. 2 out of 3 agree, it's allowed to trade. All 3 agree, the background shades. And there's a filter on top. It won't buy into resistance or sell into support, measured in ATR. Now the detail that matters more than any of the settings. The higher timeframe values are pulled from confirmed bars only, offset by 1. Skip that, and your backtest reads the weekly close before the week has closed. That's repainting, and it is the single most common reason a strategy that looked perfect on the tester falls apart with real money. Commission and slippage go in before you look at a single number. Zero-cost backtests make everything look profitable. Now the part that turns a chart into a machine. Every entry carries a message with it: the pair, the direction, the margin, the leverage, the stop percentage, the target percentage, and a secret key. That message is a structured payload, not a sentence. TradingView posts that payload to my server. The server checks the secret first and rejects anything that doesn't match. That endpoint is public, and anyone who finds it could otherwise fire trades into your account. Then it converts the pair into the exchange's format, sizes the position from margin and leverage, sends the market order, and attaches the stop and target as reduce-only orders. They can only ever close a position, never open one, and it stays in dry run until I've watched it behave. Dry run logs the exact order it would have sent, down to the trigger prices, and sends nothing. Every build here ships that way, and I'd leave it that way for a week of live signals. So the chart can trade on its own, but I still want manual control that doesn't mean opening the exchange app and fumbling an order ticket on a phone. That's the second piece. This is a bot with no framework behind it. Plain HTTP polling, about 150 lines. No async library to break next release. When I send a message, Claude converts the sentence into a structured order: symbol, side, margin, leverage, stop, target, pulled out of plain English and mapped to fields. The model returns JSON and nothing else. Anything the parser can't read gets dropped rather than guessed at. A trading bot should never improvise. Status pulls balance, positions, unrealized profit, and liquidation price. Close flattens by name. It's locked to one chat ID, so if the token leaks, a stranger messaging the bot gets ignored. The dashboard is a single prompt: dark page, equity curve, open positions, profit and loss, funding, and distance to liquidation as a percentage. A raw liquidation price tells you nothing at a glance. 8% away tells you everything. No chart library, no CDN. The curve is drawn as inline vector graphics from a log file the system appends to on every run. That sounds like a small detail. It means the page renders on a server with no internet access, in 5 years, with nothing to break. Third piece, and this is the least directional thing in the build. Perpetual futures have no expiry, so exchanges use a funding payment to keep the contract price tethered to spot. Trade above spot, the rate goes positive, and longs pay shorts. Below, shorts pay longs. It settles on a fixed schedule, usually every 8 hours. Hold the side that gets paid, and you collect regardless of which way price moved. The scanner pulls every perpetual on the exchange in a single call, throws out anything with a missing or zero rate, and annualizes what's left. One detail most tutorials get wrong: it doesn't assume 8 hours. It reads the settlement interval from the exchange for each symbol, and only falls back to 8 when the exchange doesn't report one. Assume the wrong interval, and every figure in that column is off by a multiple. You'll see triple-digit annualized numbers on the small caps. Be careful with that figure. It's the current rate projected forward for a year, and funding on a pair like that can flip negative at the next settlement. It's a screening tool for where positioning pressure is building, not a yield you can bank on. The scanner tells you which side collects. Taking that side naked leaves you fully exposed to price, and one bad candle wipes out weeks of funding. Hedging it: short the perpetual, buy the same size in spot. Cancels most of the direction and leaves the payment, but that costs 2 sets of fees, the spread on both legs, and capital tied up on 2 venues, none of which the annualized column includes. On a lot of pairs, once you subtract them, there's nothing left. Fourth piece, and this is the one you can't do on a centralized exchange. Hyperliquid settles on-chain, which means positions are public, not a paid data feed, a public endpoint anyone can call, returning every ranked wallet and what it's holding right now. The scanner pulls the leaderboard, filters to accounts above a size floor, and ranks by profit over a chosen window. Then it takes 2 groups, the 20 most profitable wallets and the 20 least. Most people only track the winners. Tracking the losers matters just as much because the useful information isn't what one group is doing. It's where the 2 of them disagree. For every wallet, it reads open positions, then sums notional exposure per coin per group, and turns that into a single bias score. Plus, 1 is fully long, -1 is fully short, 0 is evenly split. Notional matters more than wallet count. One wallet with 40 million on a coin is not the same signal as 10 wallets with 100,000 each. Then it subtracts one from the other. When the profitable group is long a coin and the unprofitable group is short the same coin, that's a divergence, and that's what gets flagged. Coins where both groups sit on the same side get filtered out entirely. There's no information in agreement. Last piece. A brief that manufactures conviction on 4 wallets and a stale funding rate is worse than no brief because you'll act on it. That's the full stack. Charts that map their own structure, a strategy that executes without you, a bot you talk to in plain English, a dashboard that tells you the truth, a funding scanner, an on-chain divergence tracker. Every prompt, every file, the Pine strategy, and the service configs are in the companion guide in the Alpha Cartel Discord. It's free. Link is in the description. If you build it, post your dashboard in the channel. I go through those. One thing before you go: this is educational. It's tooling, not advice, and none of it removes risk. Automated execution loses money faster than you can by hand, and leverage makes that worse. Keep dry run on until you've watched it behave. Start with the smallest size the exchange will accept, and treat the first month as testing, not trading. Subscribe if you want it. See you in the next one.